Dear Life Wealth Group family, it's this reminds me a lot of our time through COVID, where I would do we call this a report from the captain's chair. It's a chilly morning here. It's Monday morning. It's January 31st, and we've had a lot of volatility in just the beginning 30 days of the year. So I wanted to touch base with you and let you know what's going on and really what's the context, and more importantly, what are we doing about it as we look at your portfolios together. So we've seen a lot of volatility, as much as a 10% reduction in the markets. If we just look at different times intraday on the S&P or the Nasdaq or the Dow, predominantly the Nasdaq being down even further, and you can say that when we're over 10%, we are in market correction territory. And so what's really going on here is two predominant things. One is speculation around what Jerome Powell, the Fed chairman, would be saying relative to the raising of interest rates. I've read so much articles in the last 30 days that, how many times will they increase interest rates, and how fast, and a lot of speculations. The market doesn't like uncertainty. And what's happened as a result of that is that we finally had an announcement from Jerome Powell on Thursday, indicating that the first time that they will raise interest rates would be in March. Well, since that time, Friday and today, the markets have settled down. We've seen the S&P come back about 2%. If I look at this morning, year to date, where are we? We're down about 6%. So as we understand all together that interest rates will go up this year, might be three times, might be four times. Every time the interest rate goes up, it goes up typically by 0.25%. We know it was coming. It was just a function of when. And I would tell you, probably the last 2 months before the end of last year, the government really kind of, I would say, camouflaged it in a sense, in saying that we don't have real inflation. It is transitory. We'll see. We'll have to see how that all works out. We're all experiencing 7% inflation at this point in time, and probably more than that. We'll see how the supply chain issues will be resolved. We anticipate that supply chain issues will return to normal in the third quarter of this year, and then we'll probably be able to figure out what real inflation is. In the meantime, do expect inflation to go up, and do expect some volatility to happen. But we are not in market correction territory at this point in time at all. The second big issue that's happening right now is the massing of troops between Russia and Ukraine, a potential invasion from Russia to the Ukraine, ultimatums from Russia to President Biden as to how he's going to respond to that. A lot of theory around what is going on. Is it Russia just simply testing the aptitude of America and the strength of America standing up for Ukraine, creating some uncertainty as well? Again, markets don't like uncertainty. We've looked a little bit deeper. We've seen when Russia did this before. They were invading back in 2014. It was the invasion to Crimea. And what we saw during that period of time is that this process was heated up a lot in between February and March of 2014. Markets became pretty volatile a month before and a month after. And when this whole issue was resolved, the markets took off again. So we don't know what will happen. Nobody does. Just it creates a little bit more volatility and uncertainty. So what have we done as a result of this? We've done a lot, actually. Our investment committee meeting has taken place. We've looked at our investment choices, our investment strategies, and we've created even more strategies to be able to insulate you, protect you, as well as opportunities to create some what I call stabilizers. First thing we did is, for those folks who are receiving cash from us, we've raised cash, 6 months worth of cash in the beginning of the year before all this stuff happened. So we kind of sold out at the height of the market as we ended last year, raised the cash we need. So as we send in cash to you on a month-by-month basis, know that we're not locking in any losses. We raised it end of December. Second thing is, we were looking at different investment strategies to provide downside protection. You've heard me talk a lot about equity indexing. You've heard me talk about structured notes. You've heard me talking about tactical asset management portfolios, and a combination of investment strategies to be able to provide stability in times of a lot of volatility. Our tactical money manager shines during this period of time when we see a lot of down or fast downs. They start kicking in to provide stability in the portfolios. We'll continue to monitor very closely what's going on in the world, the markets, the economy, and how we see things. I will tell you from the captain's chair, please do strap in your seatbelts. It is going to be a volatile year this year, probably not remotely anything like that what we saw last year. So if you still have anxiety or you feel unsure or uncertain about your portfolio, please reach out to us. Let's schedule a 15-minute conversation to see how this last month has influenced your portfolio. What was the impact to it? You can reach out to Joella or Susan to schedule that time. You can schedule also a conversation online at the www.thelifewealthgroup.com. And then also do check your emails. In times of volatility, we communicate on a much more proactive basis, just like today. We're going to continue to do these short videos every 2 weeks as we go through this volatility. And I'm just going to do the state of the market or the state of the world situations, world situations and market situations, and what we're doing as a result of it. Great to be with you today. Bundle up. I know it's still pretty chilly here in Central Florida, and look forward to being with you again in 2 weeks from now.